Hello, friends. In this episode, I would talk briefly about money investments. And every investor is unique. Every investor has his own challenges and opportunities. But what you have to do is you have to learn lessons and you have to take feedback. Then you have to keep moving. And FIRA, financial independence, retire early. This is the concept which is prevailing globally. And many years back, two others started this FIRE movement, FIRA. And one of the others is in my connections, and I requested her to interview me, but she was very busy. She said, so coming to this financial independence, you must have financial independence so that you can lead your life peacefully, happily, and uh, you can retire gracefully. And especially these young people, they want to retire by 40. Some people, they want to retire by 30 itself. uh, so like that, lots of opportunities are available, and it all depends on how you have a strategy and work on them, and apart from having your own funds. So this is the basic challenge. But I am 62. I am a senior citizen. I am at to achieve financial independence because I was more passionate about education and learning. So I started shaping students globally. This is my area of expertise. But for the last 1 month, I am doing little bit of research on money and investments. And so because I just want to become financial independence, but I don't have money. And I am a survivor of brain stroke in the year 2021. So lots of challenges. I joined Indian Air Force on February 4th, 1982, and the initial salary was around 400 rupees. That means around $5. So that was the challenge, and there was no EMI culture, and so lots of challenges were there, and I acquired qualification through private education because I dropped out when I was doing degree. Then I continued my journey of learning. So I focused more on education and learning. So for the last 1 month, I am thinking about fire movement and uh, investments. And you be disciplined and be focused and be driven. Of course, money is required. Without that, we can't survive. But money is not everything. But we need to survive in this world. So we have to generate some cash in such a way that we can age gracefully. And you can get money through systematic withdrawal plan. That means if you have some corpus, you can take the money, and so you can take money through the hybrid funds, like that. Lots of mutual funds are there. Lots of innovative products are coming up, and just in the recent past, I came to know about specialized funds. That means especially young people who are ambitious, so they are thinking about specialized funds, but minimum amount is around 10 lakhs. And usually it is done by young people through short selling. But again, short selling is very challenging, complicated. At times it is dangerous also. So only thing is you have to learn lessons and keep moving, because everyone makes mistakes. Only thing is you have to take feedback and move on. These are all the aspects. And whether SIP is better or lump sum is better means we can't clearly tell about this particular topic. Why? Because SIP is usually better because you can average the cost and monthly whatever the amount you is 500 rupees or whatever it is, you have to invest. Usually you have to start this mutual funds or stock market trading in the early age, so that you can grow. And also if you fail also you can learn lessons and you have to keep moving. Life is all about failing and then again growing. It's part and parcel of life. So this is one aspect. And if you have funds, then you can go for lump sum. And when you go for a lump sum, what happens? You can use it for education, or you can use for marriage, other aspects. SIP means regularly are investing funds. But in the long run, I believe you have to go for lump sum rather than SIP. That's what my perspective. Of course, people might disagree. That's a different aspect. So now again, people talk about gold, physical gold, or sovereign bonds, or exchange traded funds. Like that, so many opportunities are available. So you have to. It all depends on your risk appetite and how you want to lead. And you create your own. If you are a senior citizen and don't take risk, go for hybrid mutual funds, and flexi cap also is good. Like that, lots of opportunities are there. So you have to learn regularly and you have to grow. And apart from this, whether you want to go for physical gold or ETF, then again different schools of thought. No, because the gold prices skyrocketed, we don't know when it will bust. We can't say, because we can't predict. You can't time the market. Currently it is, I think for 22 years gold was flat. For the last 1 year, gold prices have gone up. And again, if you buy jewelry, means then there will be wastage and charges. So that's one challenge. On the other hand, if you have gold, you can keep physical gold, or you invest in ETF, exchange traded funds. So it all depends upon the individual and the risk appetite. So I am planning to upload a couple of videos on money and finance. So I'll keep focusing on those areas, and you can get money from dividend stocks. Then again, you have to check at the again you have to check the hidden costs are involved. So all these aspects you have to take into account, so that you can become financial independence. So I request you to consider subscribing to my YouTube channel and sharing with your networks, with gratitude.